Wall Street is experiencing a bit of a Fed hangover. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower today after the release of the Fed minutes Wednesday afternoon. Now, that summary of the March meeting showed Federal Open Market Committee members agreed to reduce the balance sheet at a pace of $95 billion per month. Now, that process will be phased in over a 3-month period, which is likely to begin at the next meeting in May. The reduction will include $60 billion worth of Treasury securities and $35 billion worth of mortgage-backed securities per month. Now, this will be a runoff, not a sale, meaning the Fed will just allow those securities to mature without purchasing new ones to replace them. And this balance sheet reduction will be nearly double the pace of the last. When the Fed drew down its balance sheet between 2017 and 2019, it did so at a pace of $50 billion per month. And the minutes also showed many Fed officials are supportive of larger rate hikes in the upcoming meetings, and that revelation prompted the market to raise their expectations for May. CME Group's Fed Watch tool shows more than 82% of traders now expect a 0.5% rate hike at the May 4th meeting. Now, oil prices are flat today following the announcement of a larger global reserve release. West Texas Intermediate crude futures are hovering around $96 per barrel, while Brent crude futures are around $101 per barrel. The International Energy Agency announced Wednesday member countries will release 60 million barrels of oil from reserves. That's on top of the 180 million total barrel release announced by the U.S. last week. But supply still remains tight even with those releases. The U.S. alone consumes about 20 million barrels of oil per day. And nuclear deal talks between Iran and the U.S. also remain stalled, delaying the potential for Iran to help alleviate some of these supply issues. And the Senate has just voted unanimously to ban all Russian oil and gas imports into the U.S. That measure is now being sent to the House, where it is expected to pass. This move would bring Congress in line with an executive order signed by President Biden in early March. Making that ban law ensures the executive order cannot just be undone by a future president. Congress would have to step in to reverse that ban. The Senate did also vote unanimously today to strip Russia of its most favored nation trade status with the U.S. Now, this bill also being sent to the House, where it is expected to pass. The move will allow the U.S. to impose higher tariffs on Russian imports, further harming the Russian economy. In earnings news today, Constellation Brands shares are rallying after beating Q4 expectations. The maker of Corona beer reported adjusted earnings of $2.37 per share on $2.1 billion in revenue. That beat analyst expectations on both the top and bottom line. Constellation Brands also forecast full year 2022 adjusted earnings between $11.20 and $11.50 per share, which was better than Wall Street's estimate for $11.27. Levi Strauss shares, meantime, slipping despite an earnings beat as well. The denim retailer reported earnings of 46 cents per share on $1.59 billion in revenue. That topped analyst expectations for both profits and sales. Revenue was up 22% year over year, but Levi did say it lost about $60 million in sales due to supply chain issues. The company maintained its fiscal 2022 outlook for revenue growth between 11 and 13% annually. Now, HP Inc. shares are up nearly 15% after Warren Buffett's Berkshire Hathaway revealed a major stake in the tech giant. An SEC filing shows Berkshire purchased nearly 121 million HPQ shares. Now, that amounts to a stake of 11.4%, making Berkshire HP's largest shareholder. Based on Wednesday's closing price, that stake is worth roughly $4.2 billion, but the stock hit a new 52-week high in today's session following the news. Now, in the economic data of the day, weekly jobless claims fell to a nearly 54-year low last week. Labor Department reporting 166,000 Americans filed initial claims for unemployment benefits. That was down 5,000 from the week before and sharply beat expectations for claims to rise to 200,000. It's the lowest level of weekly jobless claims since November of 1968. Continuing claims, meantime, did rise by 17,000 to 1.523 million. versus 1.311 million expected in the week ending March 25th. But that increase did come as the previous week of continuing claims was revised sharply higher from 1.302 million to 1.506 million. And to close today, Tesla is about to throw a cyber rodeo in Texas. The electric automaker shares slipping today ahead of opening its new gigafactory in Austin, Texas, dubbed Giga Texas. The Cyber Rodeo launch party will kick off at 4 p.m. local time and is set to run until midnight. Now, the Austin factory is designed to produce about 500,000 Tesla vehicles and is expected to be expanded in the future. Analysts expect production of 100,000 vehicles at the location this year. This is the second major factory Tesla is opening this year after opening Giga Berlin in late March. Giga Texas will also serve as Tesla's new headquarters, officially moving away from the Gigafactory in Fremont, California. The new location is expected to create 10,000 new low-skilled jobs for the Austin economy. The automaker also partnered with local community colleges to offer a 14-week training program for a manufacturing career at Tesla. So what do you think about Tesla's big move to Texas? It is official now with the factory opening. Let me know your thoughts in the comments, and I'll see you all back here for the Wall Report tomorrow. Hit that subscribe button before you go.